All right. Super excited here because we're being joined by.
Oh, cool. All right.
Yeah, they told us we were set, so we can't really move. But yeah, I'm extremely excited because we have here basically an extremely diverse sampling of people from academia. Professor San, we have a lot of people in actual projects that are working on Wanchain, Dfinity, and we've got some VC kind of insight as well. So I'm extremely excited to move in here. So first, I'd love for everyone to just give a little bit more background on what you guys are working on, and yeah.
Okay, great. My name is Dong Sang. I'm a professor at UC Berkeley in the computer science department. My research area spans in AI, security, and blockchain. So in terms of the blockchain research, we are working on actually a number of different areas within blockchain, and in particular, we currently focus on a couple of different things. One is we have a project on building private smart contracts, whereas, for example, in Ethereum, you have public contracts, but oftentimes for a lot of applications, you actually want to provide privacy. So that's one of main projects that we're working on to how to ensure private smart contracts. And we're also working on better scalability for blockchain, developing some new consensus protocols. And also we are working on at the intersection between AI and the blockchain, which we can talk more later.
Yeah.
And also I'm teaching a class on blockchain this semester, and it's actually first of its kind. It's jointly taught by me in computer science, and also one instructor from business school and one instructor from law school. And given its interdisciplinary nature, it's a very exciting class. Right. Thanks.
Hey guys, I'm a partner in Blockchain. We're China's largest crypto fund. We kind of do everything in crypto except mining. We're not a big mining fan. In addition to that, I was actually co-founders with Ben on Stream, and I'm a dropout from Peking University.
I'm Jack Liu. I'm a founder of Wanchain. I just wonder how many people have you heard about it? Great.
This is our portfolio company.
Yeah. WAN stands for Wide Area Network. We're trying to bring all these different blockchains together and create a wide area network. So what we're trying to do is we use privacy and plus cross-chain and also plus smart contracts. So once we connect all these different assets on different blockchains, now we can create very complex financial applications across all the blockchains. And what we are is we already deployed 1.0. It's live now. Last week we announced the mainnet launch, so everybody can take a look at it.
Hi, I'm from Dfinity. So I work on a project called Dfinity, and it's a scalable blockchain. So it's interesting that my personal history getting into blockchain, I started about 2014. And the first kind of a stack or angle that I got into is actually a ICO platform, a crowd sale platform. There was no ICO, the term ICO at the time. And I realized, one of the things I realized is that how limiting the infrastructure is. So I go down the stack and started working on crypto finance, which is basically think about decentralized exchanges and stable coins and assets. And then we realized even that is not infrastructure enough. We need to fix the fundamental problem of performance and scalability. And that's how we kind of started commercializing, working on Dfinity as a project. So we actually was very happy to announce that we just released our white paper on consensus stuff yesterday. And my colleague, Timo Hanke, is talking about right now in Stanford BPACE conference. So this main thing about Dfinity is the first version, we get the finality time from about 10 to 15 minutes on Ethereum down to about 5 seconds. So we have about 100 times of improvements. So that's going to be a major step forward, and we're really excited to get to closer to the kind of a scalable blockchain cloud kind of vision.
Great. So yeah, I'm extremely excited because we have a lot of expertise here, and a couple of the most exciting things that have been happening in blockchain recently. So scalability, privacy, AI, and cross-chain communications, decentralized exchanges, stablecoins. So I'd love to dive into privacy first, actually. And Don, you're coming from academia, so I'd love to hear your thoughts on what does the future of kind of blockchain technology intersect with privacy look like, and your personal projects in this field. I know you've been doing something with smart contracts and privacy. Yeah.
Okay, sure. Yeah, I think probably everybody here would agree that for a lot of applications today, really we see as a challenge is that today the public blockchain does not provide sufficient privacy. I mean, we do have like Monero and Zcash and this type of things, but in general, still the privacy is only provided for limited operations, for example, transactions and so on. But for more sophisticated applications, oftentimes they also need privacy. They need privacy both in terms of protecting users' data, and also sometimes even the smart contract itself. Actually, a lot of the entities, they want to keep the smart contract itself private as well. So for these type of applications, then we need a more general, a more powerful technology to enable this type of private smart contract. So that's one of the projects that we are working on. And in particular, in terms of the technology, we are combining advanced cryptography and also secure hardware to then enable this capability of a more general and powerful and also efficient way of doing private smart contracts.
Right.
Right, so that you can really enable much broader and a much more general computation.
And one of
private setting.
one of the things you're working on specifically was an open source secure hardware platform, right?
Right, exactly. So given that part of our solution actually uses secure hardware, one example of secure hardware is, for example, Intel SGX. But a lot of people may wonder that in this case whether the solution will just rely on single entity, and also people may ask whether there are vectors being put in or just has vulnerabilities and so on. People have heard about the recent, for example, the Meltdown Inspector and so on. So one of our longer-term vision in this really is also beyond just providing private smart contract. I think overall there's actually a lot of benefits for the whole community to have actually an open source version of secure hardware that also we can provide provable security with, for example, formal verification and so on. So first of all, with open source, then we really enable everyone, then you can look at how the hardware, the design is, and so on. And also then also enables the leveling of the playground so that we can enable more vendors to provide solutions for this kind of secure hardware. Because in the future, if we really want to have these private smart contracts, then we really, actually, we need hardware solutions. Because cryptography, even though there has been a lot of work in the space, and also, the whole research community is continuing to pushing forward, but really for efficient computation over encrypted data, for example, I actually personally have done a lot of work. One of the earliest work on search on encrypted data I did one of the earliest work on searchable encrypted data. And still, for general computation on encrypted data in a privacy-preserving way, we need this kind of hardware solutions. And hence, having an open source solution for secure hardware, I think will mean a lot for the whole community. And we are in progress doing this, and I really hope also that for people who are interested in the community, we hope to get support as well.
How could people get involved if they want to?
That's a very good question. We'll send out more information later, and yeah, there's a lot more.
Cool, perfect.
Stay tuned.
Yeah, I know you've also been working on a lot with privacy, right?
Yeah,
so
yeah.
I'd love to hear your thoughts.
So
as well.
I think privacy is very important. I have a company in Beijing called Wanlu Tech, and for the first year, when we try to provide the solution for the enterprise, like including the banks and the government and the big companies, the privacy is just the requirement. Right? When they do business across different organizations, privacy is the requirement. And we look at different technologies. Zcash, Snark, Monero style, and all the other different ways, and realize that for us, for right now, we just, Monero style is a best fit for us. So we implement the Monero on top of Ethereum, and we basically added privacy for 2 different layers. One is for the native coins. For one coins, you can transact with privacy protection, with basically ring signature and one-time accounts. And also, users can create privacy tokens on top of OneChain. And that means you use smart contracts and use different code, template basically. And the platform supports you can transact the tokens and with privacy protection. And we could have a very creative way to add basically a stamp system that users can buy postage and then put the postage on the envelope and send the transaction out, make it not traceable.
Mm-hmm. So is that all live right now, or what's the progress?
Yes. Privacy, basically private smart contracts, they're live now on Wenchain. So you guys can download the wallet and then try it out.
That's great. Yeah, so I guess in the, what do you see as the main next step that kind of needs to happen for, you say, this is in progress right now, but what's, I guess, what does in progress kind of mean in terms of the...
You mean for like the private smart contract
Yep.
part?
Mhm.
Oh, we are building the prototype as we speak. So we do actually hope to, to launch something soon so that others can actually use.
That's
I mean,
perfect.
it's
Great.
a research prototype, but yeah,
Great.
it's a research project.
I mean, so our take on privacy is that it's something that we've had, at least for transactions, essentially since we had money. I mean, it was a feature of barter and cash transactions, and then we've had this very short kind of ahistorical period where we've had systems like PayPal that suddenly gave governments and corporations this sort of panoptic surveillance power over what we're buying. And we've assumed that that's normal, which is really bizarre because this has only happened for 10 or 20 years. And I think now with these blockchain transaction systems, we're able to go back to the way we've had it for thousands of years, which is transactional privacy. I guess our take on this as investors at INB is that we're still really early with this tech. And even just for forget smart contracts, but even just for simple transactions, I don't think we're quite there yet. The ZK Snark approach or the ZK Snark approach has performance issues. And I think the ring signature approach has privacy issues. And I think that we're still working through all this. But to us, this is just like a return to how humans have done money for 1,000 years. And that it's going to be hugely valuable.
Yeah. So you see that as the future of crypto, but we're not quite there yet.
Yeah, I think we're getting there.
If I can just add something, I felt like there's a couple of phases, I guess. People started looking at, say, the private businesses to say it's unacceptable to expose any of the transaction. So they started with something like private chain, like Quorum, and you basically have some parties, only the witness parties, or the counterparties involved in that witnessing a transaction. And the rest of the people, you give up on the verification. So that's like an intermediate step, but it's not really good enough. And then you have other solutions like NuCypher. Some of you might heard of that, like doing proxy re-encryption, saying let's take most of the data off-chain, and then we'll just do proxy re-encryption. What proxy re-encryption means is we can dynamically add and remove, or mostly add, parties, say just like a Google Doc, right? Starting with 2 parties, but I can have more, just like encrypted Slack, for example. In the Slack chat room, you have people leaving and coming to the room dynamically. Further than that, we are also interested, I was just chatting with the professor yesterday's dinner, and we're talking about a different possibility of using hardware to do trusted kind of computation, where you possibly could imagine some part of the blockchain having private shards, and these private shards are, yes, you do have to trust Intel or AMD or ARM to a certain standpoint, but they're trusting these chips anyway. They're running on Amazon Cloud or running on their own servers. They're trusting anyway, and that's gives them the possibility of maintaining these encryption inside a shard.
Great.
Yeah, so MobileCoin is an approach that's doing that, where Moxie Marlinspike from Signal has this project that uses SGX for the blockchain and allows kind of as almost like a layered security approach, where you can they essentially do the Monero approach, but inside SGX.
Yeah.
I think it's
launching this year, right? Yeah.
That's should be Q3 this year.
That's great. Cool. And I know another big topic that's come up a couple times has been stablecoins, right? And so a lot of people think that's the holy grail of a cryptocurrency. Right now, Bitcoin, the problem is it goes up 10,000 times every year, right? And so it's very difficult to price something in that currency, but there have been a couple things.
It's kind of a good problem to have.
Yeah, you want to capture the wealth, right, from the growth of the currency, but at the same time, you'd like to ideally be able to denominate things. So what have you guys seen as kind of promising progressions in that field right now?
I mean, so I think there's one theory that Bitcoin is the stable coin. You just have to be patient. That we're on this crazy adoption curve, but that maybe not Bitcoin, maybe Ethereum, but that you don't really need to go out of your way to make a stable coin. There's no besides the Fed, there's not a bunch of stability features built into the dollar. And I think if you do like the Fed approach, I'm advising this guy's Basecoin, and Basecoin just takes an algorithmic approach to the Fed. and says there's no reason cryptocurrencies can't do the same sort of quantitative easing and money system contraction. So I think that's really promising. I think these things are really theoretically super hard to model. And I think it's almost a waste of time to do so. I think sort of one of the lessons of cryptocurrency is that you should just build these things and see what happens. And I'm pretty confident their approach will work, but I think at the end of the day, you just have to throw it out there and see.
Yeah. So you haven't seen anything that's promising yet, but you think?
Well, so I like Basecoin's approach. I mean, the other big stablecoin approach is what Tether does. And Tether is like much maligned. And I guess like every quarter we get a pitch that's like, hey, we're building Tether, but not sketchy. And there's a bunch of people doing that. There's like some Japanese banks. There's some European banks. I think in a lot of ways that's just not that much better than PayPal or Venmo. But it's maybe a start. And maybe that's like how you bootstrap and then you have a more robust decentralized system like Basecoin, for example.
I know you have some takes on that.
Yeah, so I'm a big believer in stablecoin. Like if you look at Ethereum, what's happening today, right? The two only useful cases, one is ICO, and then you have CryptoKitty. The commonality between CryptoKitty and ICO is that both of them are super volatile, and they're more volatile than Ether itself as a base currency, right? That's the strongest argument. So in order to enable the actual on-chain commerce that we're envisioning, like decentralized Uber, decentralized Airbnb, none of that is going to happen without a proper stable coin. It doesn't have to be perfectly $1 parity, but it should be reasonably stable. I also not quite agree that necessarily that as a currency or as an asset, crypto asset like Bitcoin or Ether gets bigger, it will naturally stabilize. It might stabilize in terms relative to its own volatility in the early adoption curve, but you have a fixed supply, or at least supply is inelastic. It's not elastic to where the demand is. And if your demand is growing 1,000x, the supply just doesn't follow. So it's principally, I just don't see that stabilizing to be useful as a daily thing. And if I were to summarize, like there are three types of approaches, or the two approaches that we have seen today. The first approach is you have a centralized custodian stable assets, which is like Tether, and then you have a new thing like Trustcoin. Trustcoin seem to be positioning themselves as a cleaner version, better custodian version of trust, but fundamentally they're very similar. They have one single or multiple custodians, and you have to trust some. And if there's an asset being frozen, then you also suffer fungibility. For example, let's say the regulator comes to Eric and say, hey, Eric, you're the administrator of that stable asset, but we found that Tom is a weed dealer. You have to freeze some of his assets, right? And once you do that, the trouble, though, is I'm starting circulating that stable asset into the economy, crypto economy, and I might be using that for a swap, for a crypto derivative, or any other thing. So someone else down the chain is also suffering from that freezing action. And that's one of the things that really bothers me about these kind of centralized custodian. I'm not saying they don't have value. They definitely have certain use cases, but you have to be very hyper aware of the implication of these kind of effects. The second category of things is where Basecoin, MakerDAO, you've probably heard a number of these, algorithmically governed, right? You're using a crypto collateral. I would generally call them a crypto endogenous money. It's the idea, the concept, that we can use an endogenous, self-contained asset as a collateral to build a stable asset. The fundamental problem that bothers me with that, and I'm skeptical of it, is it's just not tied to real-world money value. And here we want to tie to dollars and euros. That's the credit-based money. So the third class approach that I'm exploring is you try to combine the two properties. One is decentralization, and then you also don't want too much volatility, and you can tie physical assets. So the basic idea, you have a crypto bond. A bond that is funded, or you can think of a CDO, a crypto CDO, right, backed by many debt obligations. And these debt obligations are all individually, peer-to-peer, legally guaranteed, and that feeds into a crypto bond. It's a lot more technical details. If anyone interested, I'm happy to talk more about it offline. But that's the only way we've seen so far that you get both the decentralized property, that you cannot be seized in certain assets, and secondly, you also get the physical value contained to that. There's some related idea. I was talking to a guy in Stanford this morning, and he mentioned another kind of meta idea where you say, okay, we don't trust any of these mechanisms, or we have some trust but not all of them. So why don't we build a meta coin which has a portfolio? And that could be useful as well. So I have a little bit portfolio of Maker, some portfolio of Bitcoin, some portfolio of the third kind of bond idea. So. But I think it's going to be big in 2018 and 19. I think we're going to see serious adoption starting.
Yeah.
I guess so. The last idea that Tom discussed is this dude James Prestwich has the way he described it to us is you can actually make a stablecoin based on your belief that stablecoins will fail, and so like You take all these stablecoins, you put them in a bucket, and then you collateralize them and issue 2 tokens.
Except the payout is in the failed stablecoin
Yeah.
itself. That's the only problem
so
I
you
see.
might have to collateralize with something else. And so I think that's the same issue that I see, I guess, with your idea of like these peer-to-peer collateralized things, where it's certainly harder to seize. But at the end of the day, like anything that involves a real-world asset, if you have enough insight into where that asset is, you can stop it. And it's the same thing, like it's really easy to shut down centralized exchanges. It's pretty hard to shut down like local Bitcoins, but like you can do it. Like it's not the same class as Basecoin, where it's like it's truly a decentralized currency on the order of Bitcoin or Ethereum. But I think these trade-offs are super interesting. And I think probably all of these ideas are going to get tried, and we're just going to see what works.
Yeah, so that's also a good segue into the next idea. We see a lot of things coming out as dApps, right, decentralized applications, but ultimately they still have a central point failure in a lot of cases where you have a front end that you have a centralized server that serves that data and so forth. So I know we talked a little bit about just moving dApps and other kind of applications fully onto the blockchain, and it seems like there might be some progress on those lines.
Are you asking about decentralized exchanges?
Yeah, so I know we've talked about, for example, CryptoKitties or something like that, right? And Dfinity seems like you guys have been working on just having some browser application, right, that would allow everything to be served directly from the blockchain?
Yeah, so we had some, we was working on decentralized exchange back in like 2015. And we're basically designing like very primitive decentralized exchanges. And one of the key principles when we work on it, we want to solve a couple of problems. We want to solve for fast liquidity. Want to solve for fairness, which is no front running, which is, I think, a problem that you see quite common across different. If you think about like between centralized and decentralized exchanges, you want to remove the central custodian risk, right? Like we just had this $500 million theft. I think I saw this the news this morning. That you want to remove that, but it's also important that you're opening your entire order book to the world, and you have to think about who are the parties that are able to front run that. They can insert your transaction before everyone else, right? And it's either minor, it could be relayer, for example, in the 0x kind of situation, and that's another thing that we should be careful about. There's also kind of global liquidity pool. So one of the problems that we're kind of constrained today is because the blockchain is fairly limited in capacity, and therefore you take a lot of the order book matching off-chain, right? In order to, for example, in 0x cases, you have many smaller relayers, essentially, or centralized exchanges, but they're not doing the settlement. The problem with that, you sacrifice the global liquidity pool. You don't have a shared liquidity pool. And there's some other projects trying to fix that problem by having an extra incentive token to encourage every relayer to share the liquidity pool. But none of that seemed to be as good as, hopefully we can get some privacy enable smart contract working so you can actually have on-chain matching while not have to sacrifice the liquidity fragmentation problem.
So are you saying that there will be a move into that it is feasible to have a fully decentralized exchange that will replace the centralized risks that we're seeing today? Or?
Yeah, I guess, I used to be very bullish on decentralized exchanges and replacing centralized exchanges completely. I even tell some of the investors maybe Coinbase is not the best investment. Maybe you should invest a lot more into it. I think the actual adoption curve is probably going to take a little bit longer, partly because of the scalability and performance issue of the underlying blockchain, partly because you still need a fiat to crypto gateway, right? The fact that I have to turn my dollars into that. However, the one thing to be aware of, though, is that new type of gateway is not necessarily the same type of exchange that we see today. It may not be Coinbase, or it doesn't have to be Coinbase. It could be someone with a banking license. It could be one of the traditional organizations who are much more better accustomed to talking with institutional holders of how do they deal with custodian, auditing, all these kind of things.
I think we're definitely going to see that. That like right now, cryptocurrency to fiat is this weird specialized thing that you need to be a startup to do, and like any bank can give you a mortgage, and I think like any bank's going to be able to sell you Bitcoin in a while. This is coming very soon.
Yeah, we see this as a big trend as well. A lot of people are saying that 2018 might be the first year for decentralized exchange, and actually OneChain is built for that as well. Once we are connected with all the other chains, we make it simple. We just ask people to move their assets onto OneChain first. Then they can do exchange a lot faster. They don't have to do log and all the other things, right? And I think not only for the regular coins, once we can integrate with the other chains like fiat currency or any other assets, including the traditional financial world, securities or commodities, they can all move into one platform to do the trading. But I agree that for price discovery and all the other things can be moved off chain. Yeah.
Great. And yeah, so for just someone who's looking to get into the future of blockchain technology today, right? What do you actually see as the lowest hanging fruit right now that could be tackled for someone entering this field that hasn't been addressed? Sure, anyone.
Okay, I'm not sure whether this is a low-hanging fruit, but I can talk about some of the projects some of the other projects we are working on. That's, I think, potentially, I'm really hoping that in the future it can have really long-term impact. So one of the areas we are working in is at the intersection between AI and blockchain.
Yep.
And of course, I think even in the community, the whole community, there's a lot of confusion. What is really what can you really do for when you put AI and blockchain together? And some may say, I think one thing is that you could use AI potentially to try to optimize for blockchain, and I think in the future we will probably see that. But the part that we're working on, I think, is really what I would call decentralization of AI. So when we look at what blockchain today has brought us, so people talk about for Bitcoin, it's the killer app is store of value, and for Ethereum, the killer app right now, it's unfortunately it's just ICOs. And I think people are here because people believe in blockchain that can bring us something really unique and something that we couldn't do before. But what are the other bigger things that blockchain could really bring us? So then we can think about what are the really important big problems in the future down the road. So in some of my talks, I actually talk about this. So for example, even Putin has said that, even Putin understands that whoever controls AI will control the world. I mean, that's what he said. So then now if we look at who is controlling AI or who is going to control AI, we can see that that's the big companies like Google, and Facebook, and so on. And so I think a lot of us, we can try to project down. If we don't change what we are doing now, what's going to happen in the future? Then, especially as AI continues to become more and more powerful, then the Google, the Facebook, they have users' data that are actually really building a personal profile for people, and then they can actually use a profile to serve you and so on. But ultimately, I think a lot of people want to take control of their own data, their own profile, and then maybe you can have your own personal, intelligent assistant to serve you. But in order to do that, we actually really need to have big changes because, again, today, Google and Facebook, they have users' data. They actually build the models, and users cannot directly get access to the models. And they have to, the user have to go to have Google and Facebook to use their services. So the question is, can we have an alternate world? Can we have a different possibility, a different solution? So that's where, at least that's where our project is focused on, is then by using blockchain, we can, for the first time, provide both this decentralization and democratization and also the right incentives to put everything together. So using our private smart contracts, essentially, for example, a developer can specify a private smart contract where it can collect users' data. Users can decide if they want to contribute data to the private smart contract, which actually specifies the terms of use. For example, the data will only be used for training certain machine learning models, and also if the model can be also, essentially, we have methods to ensure its privacy, both the privacy of the data and also the privacy of the model. And then, as the model then can be used to provide services to serve the model. And then, if, for example, as a user contributes data to the smart contract, then once the model is trained, the user can get direct access to query the model. And also, if the service also generates profits and revenue, then depending on the private smart contract's term of use, then the user may also get to share some of that benefit. So, and also the developer of the private smart contract can also share some of the benefit as well. So overall, the hope is that we can actually get the incentives lined up, and hence we can then enable then users or different even institutions can pull data together to actually train the models, but then they actually get to control their data and actually get control of the results. So they actually have access to the models. So then this way we can build these different types of AI services on top of the blockchain as well, and then enable a different type of future. And I think this would be what we call democratization of AI.
Yeah, it's extremely exciting.
So low-hanging fruit, I think there's a lot of it. I would say, first of all, don't go do an ICO. I think people really underestimate how many people are working on the important issues in the space, or they overestimate rather. Like there's like 20 people working on the Lightning Network. There's like maybe like Zcash has like 15 core devs, maybe a little more than that. So like these huge projects that have massive leverage and massive adoption, need talented devs. And if you are one, you should go work for one of them. You're going to have a lot more impact on one of those projects, I think, than doing an ICO. If you do want to build something, I think like Tom said, there's just like a ton of infrastructure that needs to get built. And there's a lot of things that you can see, like any business that's currently a centralized business that looks like it's kind of amenable to being decentralized, you should just go do that. Like our fund INB used to run a big exchange called Yunbi, so we know the exchange business pretty well. And we don't think that like centralized exchanges are going to go away tomorrow. But I do think that the decentralized exchange is going to be like where this ends up. And there's, we have a portfolio company called DDEX that's doing a really nice one. I think the 0x community in general is doing really well. And so that kind of infrastructure is super valuable, and it makes the whole ecosystem much more resilient. So I think building that is great. And then also, if you're a developer that doesn't have any blockchain experience, it's going to take you like 2 years of hard work to be able to make meaningful contributions on a protocol level. But like now is the perfect time to go start doing that. And so there's like Jimmy Song is training up blockchain devs. Chaincode has a residency. There's a lot of places you could go learn how to do this. And I think the best time to do it would have been in 2012, and like now is the second best time.
I think performance or scalability is always a big challenge for blockchain, and I think we have multiple potential solutions, and the whole industry is working on that. And one of the, or maybe to help solve the problem is, you have many chains, right? And then once we can get them together, that's why we call it cross-chain. We're working on this interoperability alliance. We're trying to bring many projects together and many ideas together to solve this, one of the biggest challenge, cross-chain transactions. And I think we have a very good solution, right? But at the same time, we're trying to create or help to create this TCP/IP of the future of the blockchain, so that we can connect all these different blockchains together.
So I'm probably going to sidetrack a little bit. I think one of the things that's kind of underrated and not being thinking enough about is my existential threats for the industry or even bigger economy is that people are not going to die of World War III, I think, humanity. People are probably going to just end up trading, everyone's going to trade crypto tokens, and productivity drops to zero. That's my biggest fear. And I think the way to counter that, I think, or at least some of the possible ideas, is today we only have, there's all the positive incentive to buy a token, pump it, and dump it, right? There's not an incentive to actually look at these blockchains and try to encourage people to attack these, for example, insecure blockchains. There have not been enough bounties. We have hundreds of $billions worth of insecure chains. We don't have billions of dollars or hundreds of $million bounties to attack or trying to file theoretical problems with them. We also wanted to design certain mechanisms to allow, for example, more efficient shorting of certain protocol deficits. We also want to find more economic models that properly evaluate. So I've seen some work being done, I think some of the venture capital community, trying to do pricing models, like for example, and also the fact that why we're still stuck with the ICO 0.1 model. That model, the fact that Bitcoin did a coin and becomes utility coin-ish thing, and Ethereum inherited that, and every single ICO in the entire world today are all using exactly the same model. I think there should be exploration different paths. For example, could there be some kind of fee-based model where, sure, I understand there are securities regulation and there's fears of that, but I think there are certain things that should be explored. For example, when you buy into a token, shouldn't you evaluate the DAO as if it's a crypto business, it's an automated business, and that automated business has profit and loss? How do you evaluate that? There's much more conventional way that you can do discounted cash flow, for example, at that kind of model. You could also explore, for example, more a governance-based token and try to establish the value of these tokens. So these things will also help, I think, some of that correction. I would also, if there's probably there are a lot of investors here, I also advise you when you talk to your portfolio, don't just encourage your entire Internet 1.0 companies and just issue your coin, right? I think there are significant consequences, implications of issuing a coin. We're all almost living in a world of a junk bond of our time, a crypto junk bond time. Like everything is just tokenized and issued, dumped to the market. I think just to be very careful of that. I would think much more deeper about decentralization. Does it actually use a certain property of blockchain? Does it actually helping certain things? So that's not entirely answering your question about new trends, but I think that's one of the more fundamental things I felt like need to be done in order for the industry not to be stuck in this forever loop of tokenization.
Yeah. Do you guys have thoughts on how we just prevent everyone to just trade and forget about the actual technology?
I think that's like actually happening in Korea. So that's something 50% of people I think are token holders in Korea. So Korea has always sort of been the future. Like Japan was the future in the 80s, but every time I go to Seoul, it's just like this feels like the future. I don't think there's any way around it. I think one of the ways is just to let people get wrecked. Like if you buy, like everyone's gone through this. I think everyone in this audience has probably like made a bad trade on an altcoin or has like lost a Bitcoin wallet. And I have a lot of friends that think that we should be like regulating to prevent this or that we should do whatever. And I don't think we should. I think we should just let people get wrecked. I think the same thing is true of custody. Like custody is really hard, as this Japanese exchange found out yesterday. And like, you can try to regulate that, or you can just let it happen, and people learn these really hard lessons. And I've noticed something that the longer someone's been in the space, like the more picky they are. And so like the people that I know from back in like 2012 are just like Bitcoin, and maybe like Monero and maybe Zcash, but it's like they're really skeptical about all these altcoins. And so I think it's like a cycle. You have to let people get wrecked.
Yeah. Cool. I don't know if we're out of time, but are we out of time here, or can we take some questions from the audience, actually? Yes. Awesome, great. Sure. Guys, so the question is, you got in December, right? And you're curious which stage of the, yeah. Awesome. So you're wondering if you're early or this is the end, right? And everyone's going to lose their money now. Cool. What do you guys think?
Depends on what you're buying. It depends a lot on what you're buying. I think there's this, the biggest sign to me that this market is incredibly immature is that every time we get a dip, these assets all move in concert. And so you would expect that there would be like some kind of a flight to quality where like the market crashes and everyone's like, oh, like I don't want Tron anymore, give me my Bitcoin. But that's sorry, that was a cheap shot. But they're not. But I mean, we're not seeing that. I think at the moment, like there are still some assets out there that are really undervalued. And as a fund, that's what we try to identify is like, what are the things that are still cheap? And I think if you got in December, what you should do is go read the history. And I think like the most underrated thing in the blockchain space is Bitcoin Talk. And it's like this ugly PHPBB forum that like. It's the history, it's the archive of the space. I think like MIT is actually archiving this thing to make sure it doesn't go away. But if you just read through all these old threads, you'll see that like a lot of these dumb ideas get tried over and over and over again. And you'll get a sense of like what's a good idea, what works, what doesn't. And you'll be a more informed investor. And I think, like the analogies to the .com space are good. Like there's no really such thing as late. There's always a good investment to be made.
Cool. Question?
So, Peter Thiel always likes to ask about, what is like a truth that you agree with that most people don't agree with you on, right? And so, we've seen like explosive growth, crypto. I mean, like just from a year ago, it's insane, right? So, as you look at the market, what are some insights that are maybe contrarian that you think most people wouldn't agree with you on, and even your peers, people that sort of push the envelope when it comes to technology? And then, if you have as a bonus question. I'd be interested, what are your thoughts on how basically all of this can lead to the emergence of sort of alternative governance systems that lie outside the system of nation states, especially economic zones, different, there are some efforts in Puerto Rico and other things, but yeah, I mean, it's a very lower question.
Yep.
Like, do you have any insights?
Perfect. Okay, so first one is.
I'll take this bonus
Yeah.
question super quickly, and then I think Tom is a
Just repeat the question
classic
first.
contrarian, so I want to hear what he thinks. But so on the bonus question, like, is there going to be a form of like extra national government that's going to emerge from crypto? I gave a talk about this in December. Balaji Srinivasan gave an interesting talk about this. I think like money is a good basis for a nation state. If you look at like what nation states mostly do these days, like the biggest thing they do is trade with each other. And so if you can control the monetary system, you're kind of halfway there. I think most of the people that are trying to start new countries these days are doing it in a really dumb kind of like cargo culty way, where they're like, what's a country have? It's got land, so like let's go find some land. Like maybe we'll like, you know, build an island in the middle of the ocean or whatever. I think land is like a red herring, and it's maybe a liability more than an asset. And so I think at the point where you have a cryptocurrency and you have a bunch of people that have the same idea, you could just go ahead and like declare you have a nation and start a sovereign wealth fund, and then talk to other nations and say, hey, we'll invest in you guys if you recognize us as a country. And if even one person says yes, then like congratulations, you're a country. And you can kind of go from there. So I think we will see that happen. I'm really excited about that.
You gave a whole talk about this, so if you're interested in starting a country,
Thank
you
you
should
for
talk
thank
about
you
it.
thank you for the softball question.
Great. So the first question was, what contrarian ideas do you have about the space? What do you believe that other people mostly don't?
I suppose a contrarian view at this point would be we're not in a bubble. That would be a very contrarian view. I think everyone is quite aware of the bubble, but everyone felt like the bubble will never end. I suppose that's one. Interesting on a nation-state one. So I used to work with a guy who was a founder of Blueseed, which was this grand idea that they're going to build a ship outside San Francisco, and they're going to basically allow all the entrepreneurs who cannot get a U.S. visa to work out of that. The bigger idea, though, is you have a floating nation-state that you can use legal. The guy has a legal background, so he was obviously thinking about legal arbitrage between different countries and states, whatever makes sense for the entrepreneur in a project. Now, I think fast forward, that was like 2012 idea. Now, fast forward to that, I think you got countries, Liberland, right? I think that's the country's name. Mm-hmm. So basically, a guy heard that there's a land unclaimed between Serbia and Croatia, about 7 by 7 kilometer, in a forest, and say, okay, why don't we just create a country? The first step is to create a Google Doc of constitutions and laws. And he registered a domain name called liberland.org, and here you go, he becomes a president of that country. And then one of the so my friend, the guy, the Blueseed guy, also flew there, actually just toured the land. It was funny that actually the president, when he wanted to enter the land, he got arrested by Croatia police because he was illegally leaving the border. But nevertheless, I think they either use Bitcoin or one of the crypto as their national currency. A lot of these kind of things, I think, should be experimented a lot more. Like one of the things that we are very used to in the startup world is lots of interesting experiments, venture funding, and failed stuff. We don't see that almost at all in the nation-state level. Singapore was a very successful one. Singapore was split from the Malaysian Federation 1960 or something like that. So I bought this book from Lee Kuan Yew, right? He talks about from third world country to first world country in one generation. That's a grand experiment, right? And obviously they tried the kind of a dictatorship model, but a lot of other people should try different models too. And I think that's one of the things that crypto could empower. You could give a crypto token that gives your tax revenue or whatever, staking that. So very bullish on that.
Any other contrarian ideas you guys have? Cool. Awesome.
Any thoughts on IBM being in the blockchain space?
On who?
IBM in the blockchain space. No thoughts. Awesome. Cool.
Yeah, this is for you. So you went to Peking University to be a VC, and it seems like you learned a lot. Can you tell us about your travels, your journeys, and what you learned along the way?
Yeah, I totally didn't go to Peking University to be a VC. I went to Peking University to do neuroscience, and it turns out I'm really not very good at studying. And so I met my wife there, and she has stuck with neuroscience and is going to go to a postdoc. But I got much more into Bitcoin, and I fell off the academic path entirely. But I do really recommend, I recommend going to China. I really think China is pretty misunderstood even now. There's really not that many people that can kind of bridge the gap between China and the US. And in terms of blockchain stuff, I mean, Beijing, like there's been for so long, all these countries have been like, we're going to be the Silicon Valley of wherever. And it like never turns out. I think Beijing really is like a Silicon Valley like startup ecosystem. There's a lot of really interesting stuff happening there, and it's worth going to check out.
Yeah, your wife was existentially worried about your career prospects until Bitcoin took off, right? And
Yeah, my wife was not stoked about me not being in college, and she was sort of a no-coiner, and now my wife is like, now she's like a hardcore Bitcoiner, so it's great.
awesome. Cool. We're done with time here. What's the plan here? Sure. All right, I couldn't hear that one too well. You're talking about a specific coin that gives rewards. It? Got it.
Sorry, we're out of time. We're going to
Awesome.
have to
Cool.
Okay.
wrap it up.
All right.
Good question, though. Good question.
All right. Thank you.
Talk to them afterwards.